Whole life plans versus term life plans is a widely debated topic with strong supporters from each side. Today, let's talk about which is actually better for you. The key differences between whole life and term life. Firstly, both whole life and term life plans are forms of life insurance, meaning they offer a payout to aid your family financially should the following occur to the policyholder: death, total and permanent disability, which in short people call it TPD, and also terminal illness. In short, people like to call it TI. But how do these plans actually differ? These two plans differ mainly in duration, price, investability, and simplicity. In terms of duration, the whole life plan covers you for life. That's why the name of it, right? Whereas the term life plan only covers you for a certain number of years. This is partly why the whole life plan costs a lot more than the term life plan. It is also more expensive because the whole life plan involves both insurance and cash value, whereas a term life plan only involves insurance. Hence, the whole life plan has a surrender value, also known as the amount a policyholder can withdraw from their life insurance policy if the policyholder terminates the plan before maturity. On the other hand, the term life plan is only an expense as it does not have a surrender value since it's a temporary insurance that only protects you for a set number of years. Simply stopping payment for a term life plan would terminate it, whereas a whole life plan has many other conditions since it includes cash value. Next, the pros and cons of a term life plan. The upside of a term life plan includes it being drastically more affordable while also providing flexibility to the policyholder. This is because it expires after a duration, has a shorter commitment, and allows the option for a renewal as well. Some people leverage off this flexibility by buying term and invest the rest. A very common phrase in the insurance market and youngsters nowadays. This ultimately allows you the flexibility to be insured at a cheaper cost while being able to use the savings from their lower premiums to invest in other areas that provide better gains. In other words, they reap investment gains without paying the daunting price of a whole life policy. With that being said, the inability to accumulate cash value in a term life plan means that one cannot grow their savings or use the plan to build their wealth, as this plan is simply an expense to gain temporary protection. Furthermore, your premiums from a term life plan get progressively more expensive as you age, so renewing your term life plan will cost more over the years. You also have to keep paying your premiums regularly throughout the policy as well. Next up, the pros and cons of a whole life insurance plan. With a whole life plan, the upside is that you're insured for life and able to accumulate cash value as policyholders are allowed to participate in the share of the profits of the insurance participating fund. This accumulated cash value can be withdrawn as a loan for other financial needs. Furthermore, the price of your premiums are fixed at the time you buy it, meaning you have locked-in premiums. This will not get progressively more expensive throughout the years. Whole life plans also usually require limited payment. For example, you may only need to pay in the first 20 years and you'll get lifetime coverage. However, a whole life plan is generally more pricey than a term life plan, but also a permanent commitment unless you surrender the plan prematurely. Doing so may result in a surrender fee that will decrease the value of your surrender value, also known as the amount you receive if you withdraw from your policy. Outstanding loans borrowed from the plan will also reduce your death benefit if they are not paid back along with the interest as well. For example, if you loan a $20,000 from the plan without paying it back, means that your beneficiaries receive $20,000 less, along with any due interest. Therefore, despite the long coverage of a whole life plan, it carries more financial risk. The golden question: which is better? With many things in life, it really depends on your purpose and your needs. But you can start off by understanding why you need the coverage, how much you are willing to pay, and lastly, if your priority is protection or both protection and wealth accumulation. If you are simply looking for protection for a certain stage of your life and are not keen on accumulating wealth through this plan, then a term life plan would likely be more suitable as there will be less financial burden and more flexibility offered. However, if you are confident you have the financial stability to commit to a long-term insurance plan and would like to accumulate wealth through your insurance, then you can consider a whole life plan. Doing so can help you achieve financial goals in your future as well. But what if you want more flexibility? And what if you are keen on a whole life plan but do not have the financial commitment for one yet? If so, you can consider hybrid plans. Hybrid plans are a type of plan that allow you to convert it into a whole life plan in future. But with that being said, not all insurers have this. So please check with your preferred insurance agent or provider. This will allow you to receive affordable coverage while giving you time to save up enough finances for your whole life plan later on, where you can enjoy the benefits of wealth accumulation. To sum it up, learn more about your needs and purpose for having life insurance, and that should help guide you to understanding if a whole life plan or a term life plan is more suitable for you. My name is Sean. Hope this info is helpful for you, and I'll see you in the next video.